Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is September 29, 2022. We're going to take a look at some of the technicals that are driving the Forex market this morning. Just had initial jobless claims came out much better than expected at 193 versus 215 expected. So with that backdrop, we have lower stock prices and higher yields. Let's get into what the currency markets are saying. Taking a look at the euro versus US dollar in trading yesterday, it was a rebound day. We saw stocks move higher. We saw yields tumble to the downside. We saw the US dollar actually take some of the tarnish some of the crown of the dollar is king idea, and we saw the dollar move lower. And if we take a look at the euro versus US dollar, that took the price above the 100-hour moving average and even above the 38.2% retracement of this move to the downside from the high price on September 20th to the low that we saw actually in yesterday's trading. The price could not sustain above that level. However, in the Asian session, we started to move back down, and we came right back down toward our 100-hour moving average. The price moved down to a low of 0.96354, about 10-11 pips below the moving average at the time, but momentum cannot be sustained, and the price moved back toward the high price that we saw yesterday and above the 38.2. The jobless claims has the dollar moving back to the upside here in the early U.S. Trading here, and back into this yellow area. What does this yellow area represent? Well, if we go to the weekly chart and go all the way back to the left side of this chart right here, this area between the 0.9662 and 0.9708 level is that yellow area on the hourly chart. I'll go back to it. Here it is at 62 and 0.9708. And as you can see, we move back into that area off of the weekly chart, which is support. And so if we move back below that level going forward and below the 100-hour moving average, we should see further downside momentum. But this is should be a support area as the market tries to figure out which way it wants to go from here. But the bears certainly remain more in control. On the top side, we're going to need to get above the 38.2% retracement and stay above that level, folks. The 38.2 to 50%, and this is just of this leg to the downside here. The 38.2 to 50% retracement level is sort of the minimum retracement level that traders need to get the price above and stay above if the buyers are to remain in control. The other level of note on the top side is the falling 200-hour moving average. That comes in just below the 50% retracement at the 83 level, and that would need to be broken as well. The last time the price was above the 200-hour moving average was up here on September 20th, so it's working its way to the downside here as a result of the move lower. So it is trying to catch up with the price, and getting above that level would be one of the requirements if the buyers are to take control. So right now we're in between the 100, we're in between the 200, we're in this swing area right here, and look for buyers down here against the 100, against the lower end of this swing area, and look for sellers probably near the 38.2% retracement now. Let's take a look at the dollar versus yen. As mentioned yesterday at this time, the price was finding some resistance against its 145 level. That 145 level is these highs right here, and we came up to that level yesterday or the day before and found sellers. And in trading yesterday, we sellers leaned against the level in the early Asian session. Why? Because this day right through here was the day that the Bank of Japan came in and intervene in the market. So that was above the 145 level. They verbally intervened right here at the 145 level, or near that 145 level. So we had that natural resistance ceiling here, and that forced the price to the downside into the New York session. But as you can see, where did we find support? Well, we found support right against the 100-hour moving average. I brought this up in my video yesterday, my Forex quick video, and as a result of holding the 100-hour moving average, we did see a rotation back to the upside in trading here today, along with the better dollar buying feeling here. And we move back into this swing area. The swing area is defined by just a number of swing lows and highs, including the near the 145 level on the top side, and on the downside we have the 144.55 level. As you can see, the price is currently trying to hold support against that level, and it has with the better data, and we currently trade at 144.72. So there's still some upside momentum here a little bit, but there is that stall as well because of the 145 resistance caused by the Bank of Japan's intervention. That's their intervention level, at least for now, and traders would need to get above that level and stay above that level, with the threat of intervention, of course, right behind them and scaring them, perhaps. So we should see some resistance against that level. I would expect that we would, and but on the downside, if the sellers are to take more control, we need to get and stay below the 100 bar moving average, and then work our way below the 200-hour moving average, 100-hour moving average, 200-hour moving average, to keep the sellers more, give the sellers more control. All right, let's take a look at the sterling versus US dollar yesterday. Of course, we saw the price move to the upside here. That was all on the Bank of England coming in saying they're going to buy bonds, and then we saw the market rotate all the way back down to this area between 1.0520 and 1.0545. What's the significance of that level? If we went all the way back to 1985 to these 2 weeks right here, those two lows came in at 105.20 and 1.0545, and the price moved higher off of that level. Moving back to our hourly chart of the sterling versus US dollar yesterday, where did the price find support? Right in between that 105.20, 105.450. So buyers did come in against that level, push the price to the upside quickly here, and closed above the 100-hour moving average. That moving average was moving to the downside, and as the price moved down in the Asian session here, we traded above and below that 100-hour moving average and moving down to a low of around the 107.66 area here. It was below the 100-hour moving average, but momentum could not be sustained below that level, and we started to rebound back to the upside, move up toward the 38.2% retracement at 108.82 through here, and we're currently trading at 108.74. Need to get above the 38.2% retracement and stay above that level. We tried it here, we tried it here, we're tried it here, and each of the efforts above that level have been lower. So get above the 38.2% retracement, get above the high price from Monday's trade at 109.304, and we might be in more business to the upside with the 200-hour moving average up here and the 50% retracement, the same move to the downside, acting as resistance. Also, this old trend line right here coming across. So lots of reasons to expect sellers against here, but the first clue is to get above the 38.2% retracement. What would ruin this scenario is perhaps a move back below the this line right here. This area was the high price from Tuesday's trade, and then yesterday's trade on Wednesday we came up to that level off of the Bank of England news, and then came back down to our support, moved above it and stayed above it into the close. But as you can see, when the market moved below that level, we did see some more selling here, and we are trying to find some support against that level. So 108.366, earmark that level here today. We'll see if the price can hold above that level. If it falls below that level, expect a test of the 100-hour moving average on the downside into. Let's take a look at the dollar versus Swiss franc on the hourly chart. And the reason why I bring this chart up is that we are trading in between. There we go. Trading in between the 200-hour moving average down here at 0.9774, and we found resistance in trading here today against the 100-hour moving average at 0.98617. That 100-hour moving average is also within this swing area here, where we had a number of swing highs through here that stalled the pair in between that level, and we continued it here, sort of continued it here and here before moving to the downside. So key resistance there. I think everyone could see that, and that's where the sellers leaned, pushed the price back down toward our 200-hour moving average, where buyers came in against that level. So trading in between the 100 and 200 hour moving average, that's called trading in between the goalposts, and we'll see how that pans out. Right now we're sort of in neutral area in between support and resistance in the dollar versus Swiss. So there you have it, a look at some of the major currency pairs. I'm doing what I call Forex quicks during the day. They're just of one single currency pair. It lasts about 1 to 3 minutes long. So pay attention to those as I give you more up-to-date levels in play for the trading day. My name is Greg Michalowski. Good fortune with your trading.